everyone is sitting around waiting for the final flush, the big capitulation candle that tells everybody at the same time the bottom is in. But that's pattern matching to a sample size of 1. What if this cycle doesn't have a villain? 2022 was a leverage fraud story, not just a price story. Luna, Celsius, 3AC, Voyager, BlockFi, then FTX. It was a contagion chain. So let's take a look at what I think is going on. So if we look over here at the S&P 500 and Bitcoin chart. So let's take a look over here. So if we look at Bitcoin, we can see that Bitcoin had a double bottom right here in 2022, June, and then again in October. The S&P 500 did the same thing. June 2022, bottom October 2022. The FTX collapse didn't affect the S&P 500 at all. It was an industry-specific black swan. So Bitcoin fell another $2,000 or so, another 10-12%. That's not a big deal. 10-12%, that's a weekend in Bitcoin. So is that what everybody's waiting for right now? Instead of DCAing this area, which is where we see ourselves right now, in my opinion, everybody's waiting for this final flush that got some people 8-10%, maybe 12% if you hit it right on the nose. Not very many people did. Instead of just DCAing in here. In 2020, people could have been DCAing 20,000, 19,000, 18,000, but they were waiting for a black swan. Oh, the black swan hit. But if you were around during this time, as I was, you'll remember that also wasn't good enough. People were waiting for another one. People were waiting for $10,000. It was all over X. It was all over Instagram. It was everywhere. YouTube. We're going to 10,000. We're going to 10,000. I have my buy orders in. Guess what? We never went there. I was DCAing this level, 18, 19, and I got some at 17 because we dropped down. Now, this here looks an awful lot like this. And unless we get some crazy black swan event equivalent to the FTX collapse, I don't see this happening. And do we want to put all of our eggs in the basket that does happen? I don't know, not me. Let's take a look at some other indicators and some other charts that make me believe that we're building the bottom. Similar to what we were building over here, similar to when the S&P 500 was building its bottom. However, what happens if we don't get another FTX collapse? Let's take a look at some charts, some indicators. So here again, Bitcoin, we have several indicators on this chart. We have the BDZ score. Let's go through them one at a time quickly here. We won't spend a ton of time. The BDZ score. This is the blockchain decoded Z score. This is on the 2-week time frame. Every time, all the way back to 2015, that this triggered, it triggered the beginning of the bottom and the end of the bottom. And when we had this green zone, this was the time for accumulation. It happened in 2015. It happened in 2018 into 2019. It happened again for COVID in 2020. It happened and marked the bottom of the 2022 bear market. Look over here. We are there right now. It triggered the beginning of this year and we're still there. When we move up, the BDZ score crosses over the moving average, it's going to trigger. So for me, this is one chart that shows we're currently in the bottom range and we're in the accumulation zone. Let's look at another one. Bitcoin logarithmic regression band. Every time that we were down here, it was value. All the way up. This was a good time to buy. But when we hit this trigger, and we have to use these together, right? This is what confluence is. We find many charts. We try to see, okay, we don't cherry pick them. The more charts, the more data, the better. Help you to make your decision. Helps me to make my decision. Boom, bottom. Again, we're there right now. Let's take a look at the 200-week moving average. 200-week moving average. All of these indicators aligned at the same moment. And guess what? We're there right now. Let's try the cost of production for Bitcoin. Put that on there. Again, all of these are converging, signaling that this is the ideal place to accumulate. Now, you could say, well, I want to wait just in case we get a leg lower. Okay, that's fine. That's your choice. You can play it however you want. I'm just explaining to you how I'm playing it and why I'm playing it this way. Historically, when all of these indicators converge, it has been top value. Let's take a look over at Blockchain Decoded now. Got a few indicators over here that we want to take a look at. Here we have the Bitcoin Heatmeter. So the Bitcoin Heatmeter right now is at 16.8. That's what it's at today. The lowest average over all the bear markets is 15.8. Okay, well that's a little bit lower than we are today. However, if we scroll down, we can see that we've already made it down into 13.4 range. And if we discount the FTX collapse, because we know last time it was an industry-specific black swan, we take a look and we look at this, what would have been, in my opinion, the bottom if FTX didn't collapse. We look at this, the bear market bottom of 2018, 2019. Even COVID dipped down into this range. And then we look back at the 2015 Bitcoin bottom. We are at these levels right now. Let's jump over to another chart. Again, the log regression band, but this one, we have a risk score on it. Look how low we are currently on the log regression band. We made it down to 0.1, maybe even the negatives. We made it down to negative, lower than the FTX collapse. Another indicator showing us Bitcoin accumulation zone, screaming at us. Let's take a look over here. Here we have the AHR999. Okay, so this one also shows us bear market bottom accumulation zones. All right, so let's just take a look here. What it does is it compares current prices against long-term cost baselines and an expected growth path. It is mainly used to identify long-term accumulation zones, exactly what we're looking for, rather than trying to time an exact entry. We don't know the exact entry. We don't know the perfect exact entry. We don't know the lowest dollar. We don't know the exact date or if there's going to be a specific event to get us there. We just don't know that. Anybody that's telling you they know the day, they know the dollar, they know how, they're lying to you. They're making it up. We have to go by the data. Here's another one. This is on-chain bottom zone signal. So this one uses 4 different on-chain metrics, brings them all together, and it pinpoints for us the bottoms. It nailed every bottom. 2015, 2018-19, 2022. Look, it's been signaling again. When we hit 4 out of 4, it triggers. Right now, today, we're at 3 out of 4, but we did hit 4 out of 4 back in June. Let's turn it on 3 out of 4. You can see all the times that 3 out of 4 have hit. Not very many 4 out of 4. Only bear market bottom zones, and we've been hitting. Look at another percent supply and profit, another one, and this one actually hit back in 2011 also. Oh, bottom, and right now. Okay, so this shows the share of circulating Bitcoin whose on-chain cost basis sits below the current price. Right now, when we get to around that 50 mark, that's historically been marking the bottoms. One more. Let's look at some macro here. This has always shown us the direction of the market, the trend of the market. It's not perfect dot for dot. Don't zoom in. This is a macro view. So we can see here when the National Financial Conditions Index is easing, when we're seeing these green, that means that the market's doing well. We print one of these dots once a week. We can see when the national financial conditions is doing well. When the national financial conditions are loose, we go up. Loose, we go up. Trending down, we go down. COVID, recovery, we go bear market. See, we're following the NFCI. We've bottomed, and then you can see trending up, trending up, trending up, trending up, coming down, and now look here, trending up. So zooming out, macro view, without trying to pinpoint and time and get the bottom dollar, we have to zoom out. We have to look at a wide variety of indicators that help us pull things together and get a better viewpoint. I won't pin everything on a date. Doesn't make sense. Now, I'm not saying that it's impossible that we see a black swan. Black swans happen. That's the definition. They're unforeseen. We don't know. But planning my whole strategy around one means betting everything on something that by definition can't be predicted. And that's really only happened in 2022 on that scale. So we don't need to predict or call, no, there will never be another black swan. Of course there's going to be. But should we plan on a black swan? Should I stay out of the market because I know there's going to be a black swan at the end of the year? Because it happened last time. Bitcoin is young. It only has a few data points to go off of. Does any of this information, this data, these charts, these indicators that we went through give us an exact bottom price, an exact date? No. Anyone telling you that they know the exact bottom price or they know that it's going to be on this date, they're lying. They don't know. However, what all of this information and this data does is it helps us to identify a zone, a range, and all of it, the price models plus the on-chain data, the macro, it's all describing the same kind of area that we've seen in every past cycle bottom. For me, it's not trying to snipe the exact bottom. It's about accumulating the ranges. When the data says we're in a historical bottom zone, it makes sense to me to dollar cost average through it.